Hey, good afternoon, everybody. Monday, the 7th of October. Sorry I didn't do a video yesterday. We're in that season of our life where we have aging parents and time for putting them into a care facility. So this week's going to be a pretty busy and distracting week on my part, but it has to happen. And so, but usually I like to get these videos out, and I couldn't yesterday, so I apologize for that. But let's talk about today. So, I'm titling this video, not exactly a Manic Monday. I think they tried to push the market higher on some trade news, but the trading, but the trading news wasn't exactly positive. The Chinese are willing to agree on stuff we already agreed upon. I mean, how stupid is that comment? And the thing that we want them to really crack down on is the theft of intellectual property, because basically what they're doing is they're riding on our coattails, and then they can leapfrog us. And believe it or not, that's what the Europeans do to us too. In the drug environment, they allow us to develop all the drugs, absorb all the risk, and absorb all of the R&D and all the liability. And then when the drugs are sold in Europe, they cap the profit margin and exclude those upfront costs. And why do you think this battle has been so hard fought? Chinese the same way. They just do it in a different way. They just basically reverse engineer it and push it into their domestic market, and not allow us to enjoy the fruits of our labor. So we're not getting a trade deal. They may put a lipstick on this pig, and then it's going to go into the election. And so I think people sniffed that out today. And then looking here, this is the TQQQ. I've been laying puts on this thing for quite some time, on and off, and we're back in again on this. And what I like to see, especially in these triples, is we're up here 2 standard deviations, 3 standard deviations, but it's downtrending. And when you get overbought sell signals, that's when you should consider go ahead and taking shorts or doing puts. And see, it's been trending down. This is a 65 moving average. It's my favorite moving average. This is a 16. This is the 65. Excuse me. This is the 13. And when you have this coming down, these were no-brainer trades. This one here pushed up a little bit higher, turned the moving average up. But you know, I front ran this because everything got weaker going into the close. So I have puts on this strike 58 for October 18th. And I'm looking for another push down on this. If it reverses on me, then I may jump out and just wait for the moving average then to fail, or wait for it to push up a little bit higher. But everything kind of start to sell. I'm going to show you that in a second. So I never like to go long the Qs, the triples if I can. I point them out to people who subscribe to us, because not everybody can do options, but it's not my favorite thing. I'd rather short them with puts because everything's in your favor, including slippage. So the other thing that we put on today was IWM puts. And again, you know, every time you see these diamonds, these circles, I'm looking to buy puts. And when it's trending up, I'm looking to buy calls. And so we just have a series of failures. We're below this moving average, and it's also its direction of travel is down. So I think the Qs and the IWM are the small caps are the ones that are gonna suffer the most. But even SPY today kind of suffered, and that's breaking down as well. And this is the one that they hold up a lot, and it's also looking the same. That pattern looks identical to all these. I just think where it's going to slip down here, there's just no enthusiasm anymore. And you know, you talk about climbing walls of worry, but I mean, gosh, we're like at the cliffs of Dover now too. The politics are toxic, foreign relations are toxic, the economy is slowing, and debt burdens are insurmountable, not just for people but for businesses. I mean, the debt to equity and the debt to assets, the carrying cost of the debts of these companies are. I heard reports. I try to find it and I'll post a video on it. That like 18 to 20% of the S&P 500 can't cover their interest payments, which is just mind-boggling to me. That's why the Federal Reserve is going to have to keep driving rates down, or you're going to see one of two things: these companies default on their debt, make the banks reschedule this debt, or the third option is then they start to dilute their equity to pay down their debt. None of those things are good for the stock market. So I'm still waving that flag. But also what's weird today is that this happened. You had the 10-year move higher. Typically when they sell the bonds off, the money moves into stocks. That didn't happen today. But of course it had the effect of screwing with gold. So they pushed gold down. And so here's what gold's dealing with. You know, it's still, they're having a hard time selling this baby off. And so let me go show you. This is the gold derivative chart. Hold on, let me show you gold itself. Here we go. So this is what they've been doing to gold. And so they're trying to fight this thing down too. And we have we have this stealth QE, which they'll refuse to call it QE gun too. So we had a couple. I took a shot at GDXJ, had tight stop. It got stopped out, and then we were long USAS, and I moved the stop up on that, and it got tagged here toward the end of the day, but we made profit on the trade, and so I'm happy with that. And I'm kind of watching C mode. The only thing really we have kind of cooking is trying to take a move on some of these natural gas plays here. And they sold UNG off again today too. So, you know, everything's having a hard time getting a bid. And I don't know if everybody's just going to cash to see what's going to happen here with this trade deal. But people, you know, have to have a half a brain in their head saying, look, you know, any trade deal China will agree to is bad for our country. So I don't know how a trade deal is a win-win. China's not going to roll over. But the Chinese are in big trouble. And I'll be talking about that more and more. They can't really capitulate. It's going to have to be forced upon them. So I think we're going to have this big battle. Interest rates will come down. The Fed's going to have to keep lowering. And at some point it's not going to matter. And then we'll get a pretty strong market sell-off. But, you know, if you have long-term money, you know, I'd be raising cash here because you don't know when the elevator down is going to hit. And then you get deploy capital after we get some structural changes going on here too. And God forbid if Elizabeth Warren is going to be seen as our president, because people are going to get the heck out of Dodge, and this whole country is going to go into lockdown because she's Jimmy Carter. That in terms of her desire to meddle in the economy, you know, be hands-on, be a you know, an intellectual, but she's not nice. She's mean, and I think her shrillness is really going to be off-putting, and it would be a miserable 4 years. So anyway, I'm more optimistic than that. I'm still in the camp that Trump gets reelected, but you gotta keep your eyes on the what ifs. Anyway, I'll catch you guys tomorrow, and we'll just keep plugging away. Talk to you later. Bye-bye.